I'm Darius McDermott of Chelsea Financial Services. Today I'm with Torcail, Stewart and Lesley Dunn, co-managers of the Baillie Gifford Strategic Bond Fund. Last time we met we talked about Netflix, a very interesting company that had a difficult time in the end of 2018, particularly on the equity. How's that performed for you recently, and where do you see the increasing opportunity?
Yes, that's right. Netflix equity did have a wobble at the end of last year, and so did the bond price. That was as a result of what was viewed as weak quarterly numbers from the company, where they only added 5 million subscribers.
Yeah, only 5 million.
Absolutely, that is the population of Norway in 3 months. We don't have that short-term focus on this company. We ultimately believe it can be investment grade over the long term, and given our longer-term focus, we took the opportunity of that sell-off to add to our position in that company. We've already seen the bonds be upgraded by both Moody's and S&P, and we think there are further upgrades likely to come through in that name.
Another interesting area that I know you invest in is retail. Would you like to give us a highlight of a couple of the retail bonds that you've got in the fund?
Yes, absolutely. The reason we focus on retail is that, or currently focus on retail, is that we think that that is an area of inefficiency in the market. We're not taking a top-down view and writing off the whole sector. We're taking a bottom-up fundamental view. And as you say, we've identified a number of companies which are strong and have sold off with the week. So that would include the Cooperative Group, Wagamama, PureGym, all names within the portfolio that we have either added to recently or taken a new position in. And the reason for that is that we believe they are resilient businesses, and if you look from the bottom up, you can find really strong growing businesses that will perform over the long term.
I talked on the broader picture. The macro is obviously very interesting as well. We're at potentially the end of the quantitative easing, now into the quantitative tightening part of the cycle. Where do you see that leaving us, and impact on rates?
So as Ben Bernanke once famously quipped, the problem with QE is it works in practice, but it doesn't work in theory. So QE was very successful in stimulating the economy and pushing up asset prices, which is part of its target. We've seen S&P 500 rise threefold, or almost threefold, since the start of 2009. And the question is, what happens when you remove that stimulus? If we look at the tightening cycles, the 13 tightening cycles since 1946 in the US, 10 of those have resulted in recession. Another bizarre factor of the global economy just now is the magnitude of debt within the system. So we are now at levels of debt to GDP that are above the level at which they were when we moved into the global financial crisis back in 2008. So the likelihood is that as rates hikes come through, they're likely to bite harder and faster than they have in previous cycles, in part because you have this added feature in the background of the central bank balance sheet unwind. And that is why we think when we look at the Fed's recent U-turn in rate hiking in the States, is that they're potentially becoming more cognizant that the US is late cycle, and that there is a risk that this economy could potentially tip over. And thus we think we could well have reached peak rates in the US.
The Strategic Bond Fund is celebrating its 20th anniversary. Can you give us a bit of information on what's changed and what's still the same?
So back in 1999, our resource base constituted of a couple of fund managers and one bond OIC. Today we have 11 credit investors. We have 7 on rates and currencies. We have a team of 7 in multi-asset. We have 4 dealers. Plus we have the added resource of a dedicated ESG team and an independent risk team. So overall, our resource base has increased quite materially. We also have a lot more collaboration with our rates and currencies team and our multi-asset team, which is very helpful for Lesley and I when we think about the strategic asset allocation on our strategic bond fund. That's quite a helpful input there. Equally, through the graduate rotation program, we now have an alumni on every other equity desk throughout the firm, and they send back a number of helpful ideas, potential bond ideas for us to scrutinise in more detail. So our resource base is very large, and it has increased both in terms of strength and depth. And we think this resource will continue to increase going forward because the partnership sees Baillie Gifford Fixed Income as an area of strategic growth priority in the long run. Now, what hasn't changed is the successful investment philosophy. That remains the same. We continue to be focused upon that area of greatest inefficiency, basically at the stock level. So bottom-up bond stock selection.
Torcail, Lesley, thank you very much. For more information on the Baillie Gifford Strategic Bond Fund, please visit chelseafs.co.uk.